Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, September 29th, 2020, 5:45 p.m. Central Time. Now remember, tomorrow's the last trading day of a month, the last trading day of a quarter as well. So you've been getting a certain amount of evening up, and no, you're not reading that wrong. Gold is back up over 1900. Silver's pushing $24.50 an ounce. This is a market just under 22, so we've come back quite a ways. The copper market fighting again at this $3 level. The dollar got hit today, down 37 points, as we saw a good rally in a number of currencies against the US dollar. The Brits are still having a full-fledged fight with the European Commission as they're trying to work out if there's going to be a Brexit or not, and both sides digging heels in, so you don't know. The energy markets got hit today in part because COVID cases picking up around the world again, and that could hurt demand. So these are the things we're watching. Now, the elephant in the room as I'm talking will be in about 2 hours from now as the presidential debate kicks off. And then, of course, later in the week, we get in the morning ADP numbers, and then we're going to start getting on later in the week our jobs data. So a lot going on. This is a busy week. When we look at gold, can you argue the fact that the market on the weekly fell back right into that support at the 18-week average and got a bounce from it? That's what occurred. As we take a look at the daily chart, when we were breaking down, I know that I was telling you that this is your next zone of support. You can see how the market came up and it flattened here, and it's exactly what happened. The market, as it turns out, came into the top of that area and found its legs. Finding its legs doesn't mean it's begun a full-fledged run to the upside. It still has layers of resistance to get through in this general area. When we look at the swing line, it turned bullish 2 days ago. This is following through again tonight, but you've got the pattern of higher lows, higher highs. As the market's coming up, we can see where it found its legs. I know I was telling you here that I thought the longer-term traders were stepping in at that 100-day average of closes, but I'm also going to tell you at the same time I expect a number of them to step out at the 1926.40 level, because you'll have traveled then between that range to the next major moving average. Now, that doesn't mean they'll all do that or anyone will follow what I think, but that's my guess as to what will happen, because when you come down hard, it's often on a chart the first resistance is going back to a major moving average. I call that the line in the sand, so that's what I'm looking for. Again, doesn't mean I'll be right. The downside had a combination of the 100-day average and the lower Bollinger Band, but you really started riding that band all the way down here for about 6 days, and it was a heck of a ride from 1903 back into that 1855 area, and now the market's been coming back up. In terms of momentum, you're working off an oversold condition. The momentum turned up. It never did embed. Embed means both of the numbers that make up the slow stochastic would have been going what? Sideways under 20. You never got that. So this is a bounce in a market that still has downside bias, momentum pointing slightly higher, and the swing line up. In the gold-silver ratio, it appears that the market again has found that about that 81 area is a little bit expensive in the ratio of how many ounces of silver you need to get 1 ounce of gold. If the market continues to fall back, look for support around the 75.26 level, which would be the 18-day moving average of closes. In the silver market itself, unlike the gold, you still haven't rallied to take out this rally high where my finger is. And to get to that number, I'll just take you there right now. That number's 25.30, and you're not up to that point. You've gotten up right now to around 20, what is that, 24.54 and a half. But the important part is the first challenge of that 100-day average of closes again held, and we were talking about this a week ago, and nice job from there. In the copper, I'm just thinking you're caught between the Bollinger Bands. You know, in the Bollinger Band theory is this, these black dashed lines. It is an algorithm built to keep the market trading within it 95% of the time. Now, it doesn't often go sideways. When you're really trending, it'll be a pattern more like this, shooting up, shooting down in a downtrend. But it's from this type of pattern that you just think of it this way, a spring inside of a pipe, and it keeps winding up for price. Can take a long time to come out of it, but I think the market's made a statement. This 312 area is high, the 290 area seems to be cheap, and we're just going back and forth in there. In the platinum market, in order to negate the downtrend, you've got to take out this rally high. Now that rally high is specifically 901.10. So the market's had a nice run back to the upside. As you can see, it just got up to 899.5, close but not there. And because the market was under the 100-day average of closes, as it rallied back up to it, it became the resistance point. So between here and the 18 of 913.70, that's where I'm looking for the resistance in this market. Momentum is up, bias is down, trend is still down, and you're at one of the resistance areas. That's why I'm thinking gold on the first challenge of that 18-day average, which was up at that 1926 area, could be the resistance zone. The palladium market is acting bullish. The market, similar to the platinum market, in this sideways band of action. Copper similar too. So I'm not looking for a big run up or down. You're back to the neutral area, but you've got momentum up. The bias is up since you're over the 18-day average, and the swing line is up. Last, the dollar index. The market's falling back from the upper Bollinger Band. You lost the embedded reading. Now, when you lose an embedded reading, this was embedded, you lost it today. Unless it gets it back 1, 2, 3 when the markets reopen tomorrow morning. Now, I know they're going to open tonight, but you want to get through the presidential debate to know how the market's going to react. So that's why I'll say the morning, just for the sake of it. Unless it gets it back, I look for prices to retreat back to the 18-day average of closes. What they really did is they had formed a base here. You've had a breakout. Is it going to have any legs to it, or was that it and it's just widening out the trading range? That remains to be seen, but right now, momentum to the upside has come out of this market. I want to remind you about our futures trading kit. It contains literally everything that we try to offer to you and more. 2 versions of our charting software. Both it's a download version. The other is our online version. You get all these different parts in the market, trading rules, chart patterns, something you should just keep right by your desk all the time. Money management ideas. You know, people think that calling the market right or wrong is everything. It's not. Money management comes in as much as anything else to build positions often. Technical analysis, you know, I love that. That's the part I stay with. A lot of you like fundamental analysis. Well, you get our fundamental reports. Now, we write reports from Dan Huber, David Hightower. We've got all kinds of reports that come out, CIS systems over the weekend. There's a lot of data. If you're a commodity trader, it's a treasure trove of data that keeps coming at you. So something you might want to consider, introduction to options, and of course, we link right into the different exchange brochures. How do you get this? It's simple. Just call us. We send you a link. It all opens up right on your own desktop, and away you go. You can delete it whenever you want. You can print everything out. Go to www.iraepstein.com. That's www.iraepstein.com. On the bottom right, you're going to see our free offers. Click on it, and away you go. I'm Ira. You have a great day.